based on all the evidence in front of me, is that these Chinese commercial banks are getting this gold from the Shanghai Gold Exchange, and they're storing it at their own vaults at the Shanghai Futures Exchange,
Hmm.
bit by bit over the last year and a half for a upcoming event, something that is going to happen.
You're watching CapitalCosm. My name is Danny. It is September 23rd, 2025, and my guest today is none other than fan favorite, Eric Yeung. Eric, thanks for coming on.
Thank you, Danny, for having me on your show again.
Yeah, lots of stuff going on today. Gold making new all-time highs, past that $3,800 handle on the futures market. Spot is still probably on the brink of breaking out of that $3,800 handle. Silver's killing it. Silver's above 44, currently at 44.58 at the time of this recording, futures wise. Eric, you and I were just talking for a good bit before we hit record, talking about some of the developments ongoing with China, and how they're kind of setting the groundwork to to create this gold-backed system all across the globe. But let's go ahead and kick it off with you from a very macro standpoint. I'm going to pull up the gold chart here. We can take a look at some price action really quick and get your thoughts on that. But here we are. You can clearly see gold has broken away to 38.11 on the futures market. And this time last week, around Wednesday, almost this time last week, you saw the Fed announce 25 basis point rate cuts. And since then, we've had a pretty tumultuous ride to the top as a result. So go ahead and take it away.
Okay, so the first chart I want you to pull up, Danny, if you can, is the chart from Google. It shows the audience the number of warrants that are issued at the Shanghai Futures Exchange for gold.
All right, let me get that. All right, here it is.
Okay. So as you can see, for the longest time, for the last 10 years, before 2024, it has been hovering around 4 or 5 metric tons at the Shanghai Futures Exchange. And then in the middle of 2024, something happened. It shot up to approximately 10 metric tons. Not too much, just a bit, right? I guess
Mm-hmm.
double of the historical average of around 45, but at 10. And then it really picked up in 2025, especially after February. It just shot way up.
Mm.
And we are now at, as Hugo said, we are above 50 metric tons now. I mean, as a matter of fact,
Wow.
a couple of months ago, I believe it was sitting at 45, around 40 metric tons, just a month or two ago. And now we are at 56.43 metric tons
Yeah,
of gold, of
and
physical gold at
this is
yeah.
this is an order of magnitude of where it was when it was kind of flatlined here all the way up until mid 2024. It looks like it was about 5 metric tons in mid 2024, and now it's at well over 50, 56.43 to be exact.
Yeah, exactly. So a lot of people come to me and tell me, they're like, Eric, this is just some guys or the Chinese banks playing the arbitrage between the Shanghai Gold Exchange and the Shanghai Futures Exchange. Um, that may be the case, but it certainly is not because of that we are at 56.43 metric tons at the SHFE right now, which is the Shanghai Futures Exchange.
Mm.
Now, why do I say that, Danny? It's simple, right? Because unless the guys who are playing the arbitrage are using domestically produced Chinese domestically produced gold, they are subjected to a 13% VAT, which is a value-added tax,
Okay.
if they are to transport the gold from the SGE to the SHFE to profit from the arbitrage, which is, by the way, less than 1%
Right. And so
of
they're
arbitrage.
initiating it.
Yeah,
They're
yeah,
initiating a taxable event each time they do that.
yeah, yeah. If they are using non-domestic gold, domestic gold,
Right.
they they're okay, they can do it. But as we all know, China imports a ton of gold. Like their domestic gold is only able to fulfill a portion of the domestic consumption. As a matter of fact, I believe in the last couple of years, China has imported over 1,400 metric tons of gold per year in the last couple of years. So anyway,
Mhm.
the bottom line is this: domestic gold is limited for them to, play this arbitrage game,
Right.
and foreign imported gold, if they are to use to play this arbitrage game, would incur, like you said, a 13% VAT, and the arbitrage is less than 1%.
Hmm.
So it doesn't make any financial sense whatsoever.
The
Okay.
incentives aren't there. Yeah.
The incentives are not there. But guess what? If these Chinese banks, and these are the big five banks led by the Bank of China, if they are to transport the gold from the SGE, the Shanghai Gold Exchange, to the SHFE, which is the Shanghai Futures Exchange,
Okay.
under their own name, okay? So without a change of ownership from SGE to SHFE to their own vaults, because these banks actually operate the vaults at the SHFE, which is the Shanghai Futures Exchange, then they are VAT exempt
I see.
across the board. You see, right? So my conclusion, okay, or my hypothesis based on all the evidence in front of me is that these Chinese commercial banks are getting this gold from the Shanghai Gold Exchange, and they're storing it at their own vaults at the Shanghai Futures Exchange,
Hmm.
bit by bit over the last year and a half, for a upcoming event, something that is going to happen.
And so they would need them in the futures exchange in preparation for this event, as opposed to the gold exchange. Why? What's the difference between storing in one versus the other?
They don't operate the vaults at the Shanghai Gold Exchange. They operate the vaults at the Shanghai Futures Exchange. So isn't it better if you're going to use that gold to store it at your own exchange, at your own vault? This is what they're doing, right? Like there's minimal
Mm.
cost to that because they operate the vaults
Okay.
at the Shanghai Futures Exchange, right? So what we think is actually happening, what is going on, and I'm going to zoom out even more, is that China and the BRICS countries, they are about to try using non-US treasuries, neutral reserve assets to settle the offshore repo, interbank, interbank lending, and also offshore lending. Now, you might ask me, you said a whole bunch of stuff, Eric. What does it all mean? What does it all mean, right? You know how the milkshake guys, they tell you, right? They tell you what you see as US dollars out there is not actually all the US dollars that are
Hmm.
out there. They're also euro dollars. They're also, dollars that are used by foreign countries for international commerce amongst themselves. So they're not even doing business with the US, but they're using US dollars
Right.
to transact amongst themselves, right?
They're using a middleman to
And
transact amongst
but
themselves.
yeah, they're using US dollars, and on top of that, they're using US treasuries
Hmm.
as collateral to do the transactions.
Yeah.
So And some viewers may not understand that when you are, you know, doing offshore interbank lending, you need, if it's a secure lending, you need some sort of a collateral. And in the past, or even right now, 70% of that is in the form of US Treasuries. So let's say you have a bank A and a bank B, and bank B want to borrow money from bank A. For secure lending, bank B would sell the US Treasuries to bank A,
Mm-hmm.
promising to buy those US Treasuries back at a predetermined later date at a higher price. So the higher price, the differential, the higher price versus the price they sold the US Treasuries to Bank A is the interest. Make sense?
Yep.
So that's the liquidity there, right? Like offshore interbanking liquidity. And also, if you are like if you are a foreign supplier of, let's say, commodities to China, you can use this facility as well to acquire liquidity. Anyway, the problem with all this is that you have the U.S. freezing Russian assets after the Ukraine war started, and now they're talking about confiscating those assets. Isn't it? I'm going to ask your viewers this: isn't it a huge risk for countries that are not really friends with the U.S. to use the US dollar to do business amongst themselves, and also to use US dollar denominated collateral, i.e., US treasuries, as collateral for the interbank lending and also for their,
It's a
commerce
liability.
amongst each
Yeah.
other.
It's a
It's a liability
liability.
because like the
Yeah.
US can freeze that anytime,
Mm-hmm.
right? They can say, we don't like you guys, so we're not going to clear your US treasury transactions. They can do that. So what is happening, Danny, I think, is that that gold at the Shanghai Futures Exchange is in preparation for the launch, which already happened supposedly, the launch of the offshore Shanghai Gold Exchange vault in Hong Kong. So what I think is happening is they at some point they're going to take that gold,
Mm-hmm.
they're going to put it in Hong Kong at the
Okay.
SGE vault, and the SGE calls that offshore because it is. Like Hong Kong, although it's within the borders of China, it's actually offshore in an economic sense because Hong Kong doesn't have capital controls, whereas mainland China has capital controls.
I see.
Okay, so they probably will take that go to Hong Kong, and then in the SGE vault, put it into the SGE vault in Hong Kong, issue them warrants, and then use the warrants as collateral for exactly what I just said, offshore interbank lending and offshore commerce
And they're going to start off with Hong Kong and expand beyond
to
Hong Kong.
Saudi Arabia, Moscow, New Delhi, etc.
And I mean, if the way you put it, it seems very clear. Like the board game becomes very easily discernible at this point. Clearly, there must this must also have been discovered and found out about in the Trump administration. Is there something? Is there a counterpunch that we can anticipate from the Trump admin to this, or is there nothing they can do about it?
No, I think they knew, like all the way back December of last year.
Hmm.
That's why when he became president, like you see that the U.S. started draining the LBMA at an accelerated rate of physical gold and silver. We talked about this, right? Like started just
Yeah,
importing gold from the LBMA like crazy. And I think what happened recently is that the tariff negotiations are not going exceptionally well, depending on the way you look at it, right? I don't think it's going super well because it's pushing the BRICS countries together. Like, the Trump is asking in some cases for the impossible for these big BRICS countries to agree to. So in a way, he is pushing these big BRICS countries closer together. And I think also, you're probably aware of this, Danny, that the Trump administration is trying to launch um, some sort of a stable coin
Mm-hmm.
to um, to essentially alleviate the pressure on the U.S. Treasury market. So that's basically like, how should I say this? I mean, Russia came out, I guess, a month ago and said it, right? It's just a magic trick. It
Yeah,
doesn't change anything. It
through their
just doesn't change
communication.
anything, right? You're putting lipstick on the pig and call it something else. It doesn't do anything different. So I think maybe they already got word back that the global south is not buying that. It's not going to, you know, buy into this little trick that they dreamed up using the stablecoin.
Mm-hmm.
So now they're back to plan B, which is the gold and silver that they have
And,
imported
and
from the LBMA.
what's interesting is that after last week's announcement of a rate cut, gold shot up since then, and crypto has. I mean, I wouldn't say it's gone down a huge ton, but it hasn't gone up. It's actually gone sideways, if not a little down, since then.
Hey guys, quick pause from the podcast, but this is something I feel is really important to let you in on. Back in 2020, before I even started this channel, I was looking for an edge, a way to find the big opportunities most investors never even hear about. That's when I found Capitalist Exploits Insider. From day one, it felt like I suddenly had my own team of world-class market pros working for me, digging up trades all over the world, doing the deep research, and handing me ideas that had massive asymmetric upside. Stuff that I would never even think about. Since then, my gains with them have blown past the S&P and the NASDAQ, and it's honestly the single best newsletter I've ever subscribed to. And that's not me blowing smoke. That's for real. I've interviewed their publisher, Chris McIntosh, more times than I can count. In fact, my latest conversation with him is linked in the description box down below if you want to check that out, as well as a pinned comment. And every time, I'm reminded why I've stayed a member for years. Right now, they're offering a special $1,000 discount on the Insider subscription, but it's only for CapitalCosm viewers, so you're only going to get it by clicking the link down below in the description box or the pinned comment. You're not going to find this anywhere else. Click the link, lock it in, and start getting the same game-changing research I've been using since 2020.
Okay, well, I'm going to read two pieces of news for you, okay? If you look
Sure.
at that slide with the orange lettering from Bloomberg News
Okay.
on the 23rd of September,
Okay.
can you show your audience? It
Yep.
says China calls foreign gold reserves to boost global clout. So China aims to become custodian of foreign sovereign gold reserves to strengthen the standing in global bullion market, according to people familiar with the matter. The People's Bank of China is using Shanghai Gold Exchange to court central banks in friendly countries to buy bullion and store it within the country's borders. So it kind of supports what I just said. Hong Kong is within the borders of China,
Mm-hmm.
and yet it's offshore economically because it's not. It's a special administrative region where its currency and also ethics is not controlled by mainland China via capital controls. So it's a perfect location for what I just described to you, which is a neutral offshore territory to experiment on a non-US Treasury neutral asset, which is physical gold, as collateral
Mm.
for international commerce and interbank repo.
So to be clear, this would
Yes,
imply that gold would act as a substitute for U.S. Treasuries.
correct.
between commerce between
Correct,
two.
because like I said, like if you're using U.S. Treasuries, you're not like a buddy of the U.S. government. It's a system. It's a it's a systemic risk to your system.
Hmm.
Like the U.S. government can one day say, "We don't like you guys, so we're not clearing any of your transactions." They can do that.
Right. So
So
when
using a
India wants
neutral,
so
yes,
so when like India wants to buy, I don't know, Brazilian oil or something, they have to go out,
correct.
get US dollars and initiate the trade that way. And
Well,
so
if the in the past when everything ran on U.S. dollars, yes,
mhm,
because everybody trusted the U.S. Treasuries as like grade A, highly liquid, premium collateral, right? HQLA.
and now they would they have to also instead procure gold in the place of US dollars to initiate those kinds of trades.
Correct. And then for the currency leg, they can use any currency. They don't need to use US dollars. They don't need to use RMB if they don't want to. They can use like Russian rubles, the Indian currency, or like whatever South American peso currency that they use for
Yeah.
that repo deal or that financing deal.
And so what I'm
But
getting at
yeah,
is that demand for dollars and US treasuries is maybe not entirely, but it's slowly shifting over to the precious metal, or more specifically, gold in this case. So that
absolutely.
huge,
I mean, I wouldn't say it's shifting over completely. It's like it's
right?
going to be a parallel system to
But
the
even a
U.S.
small
Treasuries.
fraction, even if a small fraction of that rotates over to gold, I mean, that is humongous.
I think somebody did some calculations on this and said that if let's say just like 10% of that collateral goes to gold, the world would need an additional 1,000 metric tons of gold per year
Mm.
at current prices. So that's like 5%,
Yeah, so there'd
five
be
to
a
ten
deficit.
percent.
There'd be a deficit.
Oh, absolutely.
Yeah.
And then on top of that, like since we're talking about breadcrumbs, right? Clues as to what's going on. Didn't you notice, Danny, that recently Goldman Sachs came out and said that the everybody should have 20% of physical gold in their portfolio?
Yep. 20% gold,
That's
20%
20,
bonds, and 40 and what was
yeah.
it, 40 stocks?
So it's no longer
60
60
stocks.
40. It's 20% gold and the
Yeah.
rest whatever, right?
60,
But
20,
like
20.
20% gold is crazy. I mean, I didn't even start out with 20% gold when I
Yeah.
first got. That's 20%. I mean, I started out with less than 20%, but it grew to over 20% because the gold price went up, right? But like they're just right, like telling people that they should allocate 20% of their portfolio to physical gold.
That's huge.
That's huge. And
A massive rotation out of
uh,
stocks and bonds and into gold.
absolutely. And these guys don't do anything, don't say anything unless they have the blessing of the US government.
Hmm.
So I think, like, like I said earlier in your program, I think all these guys knew, even all the way back in December of 2024, and we are just now finally at the stage where they realize that they have to let gold in
Yeah. Well, they got their positions in
to make it
early.
work.
They
Oh
got
yeah,
their
exactly. And
positions
they
in.
have, and they realize that there's no other way, right? Gold has to be the alternative collateral for these non-US friendly countries. Therefore, why unless they want to make it create a catastrophe where the gold price just blows up sky high, they have to let go of the bricks and let the gold and silver prices naturally progress higher, which is what we're seeing right now.
But what's the incentive? Why would they want to let the gold prices rise higher?
Well, like I just said, right? It's their plan B.
Yeah, yeah,
It's
I
the plan
understand
B,
it's plan
right?
B,
Like,
but
yeah,
but
yeah.
but how does that serve them? How does that serve them in the end?
Well, if it goes higher, it goes back to what I told your audience, I guess 6 months ago, which is, let's say gold is at $10,000 US dollars per troy ounce. They can theoretically they can issue something like $5 trillion worth of gold certificates to the Fed, and the Fed will give
Mm,
them five. I think it's either 5 or 8 trillion, something like that, right? Um, the Fed can issue them trillions of dollars in US dollars, without basically scot free, without any like other conditions. That's how the system works.
hmm. Yeah, so
Yeah,
effectively, it would be a gold reval.
exactly. They can revalue the US Treasury gold, issue the gold certificates at the new price to the Fed, and the Fed will print them that money free and clear. They're
Yep.
scot free. There's no strings attached, basically. And that will solve a lot of their problems, right? Because
Mhm.
what they can do at that point is they can buy a lot of the long end US Treasury back, and that'll actually, make the US Treasury market a lot healthier than what
Yeah,
it is right now.
yeah. Well, let's go ahead and shift over some Fed news. And you sent over this article, which is one of the Fed governors. This is Stephen Moran, pushes the case for central bank to slash key interest rates. So this guy thinks that the Fed isn't going hard enough on slashing interest rates.
I
Go ahead.
mean, like again, Danny, I think that goes hand in hand with what we have discussed today, which is you asked me a question. You said, um, how does it benefit them if the price of gold goes up?
Yeah.
It, well, they want to devalue the US dollar, right?
Hmm.
I mean, if they're
Yeah,
slashing
this guy.
interest rates, they want to accelerate that. Aren't they promoting the devaluation of the US dollar? To what
Yep.
end? Why would they want to do that? They want to reshore manufacturing back to the US
Mm,
to a certain extent. So
right.
you can't have like the US dollar being the cleanest dirty shirt in the laundry and expect to reshore everything back to the US.
Yeah, and this guy's talking about low 2% for the Fed funds rate. Currently at what?
That's
Four,
pretty
four?
that's pretty low, my friend. That's like
Yeah,
slashing in half,
that's like
right?
200 basis points, 200 plus basis points. We're
I
at
think
today.
I actually think he'll get it. I mean, the guy looks like he's very trusted by Donald Trump, and whatever
Mhm.
he says is probably what the Trump administration wants from the Fed.
Maybe he's trying to line himself up for to be Powell's replacement. Who knows?
It's very possible, and I think he would be a prime candidate for that.
Yeah. So, what are some of the halo effects that we can anticipate from this this global capital reallocation to gold? Do we see a halo effect? I mean, we're seeing it now. Uh, flow over to silver.
I absolutely think that would be the case. It's happening. I mean, gold is the monetary metal. Silver is the half industrial, half monetary metal. But if gold goes up, most of the time silver follows, right? And in later stages, silver outperforms gold. Now, we talked about on your program that silver has been in a mining deficit for a while now. So that's without investment demand. Is investment demand, as you probably know, in the US for physical silver, has dropped to dismal levels. People have been selling their silver trinkets, family silver left and right in the US. So whatever price action that we've been seeing in the last year for silver, from $20 to now we're at what, $44 silver, has really been driven by industrial demand of silver.
Mm-hmm.
And we are, I think, at the breaking point for silver to shoot up to a high equilibrium so that more silver mining can come online to satisfy the global need of silver.
Yeah. Yeah. And then you're also seeing these mining stocks really kicking into high gear. GDX, SIL, both outperforming the physical prices in both metals. So do you still anticipate the mining stocks to continue getting a bid here, or have they run too far?
I think they will, Danny, because I think the you know um, U.S. financial institutions, like I said, Goldman Sachs came out and said that 20% should be allocated into gold.
Hmm.
I think they're just getting started to rotate into physical gold, silver, and the miners. So um, I think has been said by a lot of experts, like Rick Rue, like Tevi from Crescent Capital,
Hmm.
that U.S. institution allocation into physical gold and miners has been dismal, has been less than 3%
Yeah.
in like yeah, sorry, yeah,
And no, I was going to say one thing we didn't touch on is platinum. I don't know if you looked at the platinum chart today, but it's up almost 5%
today.
today. Yes, it's up
Wow,
$69 just
holy,
now.
that's good news, Danny, because I own a lot of platinum, as you probably know. So like, um, yeah, I think platinum is going to do well because platinum is like 60 times more rare than gold, but it's
Hmm.
at what, less than half the price of gold right now per troy ounce. So so it's a no-brainer. Platinum is going to catch up at some point.
Yeah.
It's all good.
Yeah, some exciting stuff happening in the precious metal space. Whether it's signaling good or bad things is a different discussion. But I guess if you're a stacker or a precious metals mining stock investor, um, happy days are here again, at least for now. So, Eric, it's been a pleasure having you on, my friend. Anything else you want to cover before we wrap up here?
I think people just need to be patient. If they own miners, gold and silver, just hold on to them. I believe it's just getting started. This whole, you know, ramp up of gold, silver miners.
Yeah, yeah. Well, Eric, where can people find you if they want to see more of your work?
They can find me on X at King Kong 9888.
Excellent. We'll have the link to that down below. Eric, thank you so much for your time, my friend. Guys, if you enjoyed this podcast, let me know your thoughts. What do you think of the analysis? Do you agree with it? Do you not agree with it? In either case, let me know what you thought of it because I do, in fact, read the comments. And don't forget to hit that like button and subscribe to the channel if you've not done so yet. Because I do, in fact, go through all the comments. I do, in fact, take your critiques to heart, provided they're constructive. And by liking and subscribing and commenting and engaging, it's going to be straight with you. It does help us in the algorithm, and it's an easy way and a free way to help support this channel's growth and this video's boosting in the algorithm. So if you want to support us that way, a little bit certainly does go a long way. But if you want to take it up a notch and become a paying member to our Substack, you get all my interviews early and ad free and uncensored for the ones that warrant it. So take advantage of that if you'd like. You also get the chance to ask any of my future guest questions, as well as the chance to make guest recommendations for future guests. So, with all that said, thanks for watching, guys. Eric, thank you for coming on, and I will catch you guys later. Bye.